Welcome back, guys. It's been a minute. So, Happy New Year. And let's say Merry Christmas, belated, and Happy New Year. Today it's first first of 2026. So, we have big plans for this year. Big plans. So, we had a trade on, right? And let's first see the account. The account is currently at zero, man, zero. Okay, so I didn't go to loss because I called out this trade. If you do remember, we were in on NZDCAD and we had sold, and as you can see, we have sold perfectly. Perfectly. We had entered from this point and added more to our position around this area. So at this particular point, we would be up like I don't know, $600 or $700, or even $1,000. So we would have done the $100 to $1,400. But what ended up happening is the same thing I was talking about in my last video. So I broke my own rules, man. I broke my own rules. I did not set and forget. Like, I don't know, I don't want to be harsh to myself, but you also have to be accountable for your own mistakes. So I didn't hold this trade. I didn't set and forget. Instead, I go out at this area right there. So I actually got out on a loss of like $50, and look at what happened right after I got out. Look at this. The market sold aggressively. If I had to wait, I would be up like $1,000. So let's see. We are looking at the $110,000. As you can see, we are only up about $317. So yeah, that's not good. So basically, the total profit plus the $100 is about $417 in general. So we ended up losing like, I don't know, $87 because I ended up making some stupid trades, but it's okay. It's okay, guys. So why am I back once again after messing up like I did? I'm back to tell you that I have really thought about this situation, and one of the main reasons that got me to get out of this trade is seeing a very huge drawdown. And if you can actually listen to my previous video, you can actually see what I meant by the fact that uh, you seeing a drawdown may actually cause you to close out on a trade that may continue to take profit. So this is what I have done to the current strategy. So previously, you know that we used to, okay, this is how we do it. We go to the weekly chart, we draw our area of interest, after which we go back to the daily chart and the H4. Once we get a rejection on the H4, we enter, right? And this is what happened. As you can see, this is where we got our first rejection. As you can see right there, we entered the position at this point, putting our stop losses. Let's put a short position. So this is where we entered after we saw this rejection. Let's see. After we saw this rejection right here, we entered at this point, and we did put our stop losses above this area right there. So as you can see, it's a very huge risk to reward ratio, and even if right now it would be where it is right now, it would be about 1.7 risk to reward ratio, somewhere there. And we also had another trade right here which also risked the same, so we are risking like $400. But this got me thinking, the fact that I was waiting for all these, is there no way I could reduce these losses, or the entry time, or things like that? So this is how I came up with this particular way of now looking at the chart. So from now on, I've added several rules to this particular strategy right here. I don't know how many minutes we got. We got like 16 minutes. Okay. So this is how we are going to do it from now on. This is how we are going to do it. First of all, we need let's actually test out this trade, test out this strategy. If you were to enter it like this, okay. And the reason, okay, there is a downside and there is an upside to every kind of trading rules or any trading strategies, there is always a downside. So the downside of this particular strategy is that you have, um, yes, you have a shorter time of waiting for a trade, and you have a better entry. So meaning you can have much tighter stop losses, and it will not take as much time. Like you will not wait for the trade like 3 weeks or 4 weeks. But the downside of it is that you also have a higher chance of losing because you can't be stopped out. But the best part is this: even if you get stopped out, you will still get another entry. And since we have a higher win rate, let's say now 1 is to 60. I haven't tested it fully on a long term basis. I still don't have enough data. This is what I mean. But I have enough. I don't know if you get what I mean. Okay, so the rules are simple. First of all, we mark the area of interest. Okay, this was our area of interest. Let's see how we would have managed this particular trade. So this was our area of interest, right? So let's see. So this was our area of interest. So we have marked it. The um, second part or second rule of this particular strategy is wait for the price to get uh, to the area of interest. And this is what happened. If, as you can see, the market got up all the way to our area of interest. And what is the next step once we get to the area of interest? Wait for the price. Wait for a good price rejection. Example, engulfing candlestick on the H4. So once we got to this area, what did we wait for? And actually, this was part of what we were waiting for. This rejection. So once we got this good looking rejection and engulfing candle on the H4, we entered. We entered still on our area of interest, looking to sell it. But now, this is the idea. Yes, we do get to our area of interest, but once we see the rejection, now we drop down to the 15-minute. And if, as you can see, we have added several moving averages. The reason why we have added these moving averages is we have now the 20 high or the 20 low, the median, that is high divided by low. Okay, basically it's the median between the two. And we have a high. So we have a high, 20 moving average high. Let me show you. Let me show you the input 20 high. And we also have this, which is 20 median, that is high over low. And we also have the low. Okay. So we have 20 high, 20 low, and 20 median, and they are all exponential. So those are some of the changes I made to the strategy. Next, we go back now after we have seen that rejection on the H4. We go back to the 15 minutes. Let's actually see what happened once we go to the 15 minutes. First of all, reset the chart. This is the area of interest. Oh my goodness, I moved it. This was the area of interest, as you can see. So once we go to the area of interest, reset the chart. So once we go to the area of interest, what did we see or what happened? All right. So let's see. So yes, we got to the area of interest. As you can see on the H4, we have had this beautiful, beautiful rejection right there. So let's put a line right after that rejection so that we can actually see what could have happened after that. So we can put a vertical line right after this rejection. So for us now to go to the 15-minute and see what happened. So if you go back to the 15-minute, this is what happened. We had this really gorgeous rejection. Nice. And what happened after that? We are actually below the moving averages. So what is the next rule? The next rule is this: wait for a rejection on the moving average, either the low or the median if you're buying, or the high or the median if you're selling. Keep in mind, this is now the entry rule. This is what that actually helps you to enter on this particular trade. You have to wait for that. You have to wait for, first of all, you have to wait for rejection of that particular moving average, that is the low or the high, if or the low or the median if you're buying, and the high all the median if you're selling. So as you can see, we have had this rejection, right? And the H4 have started. As you can see right here, we have had this 15-minute candles. Now go back to retest the low, and we have seen this kind of rejection. So meaning our first entry could and would have been right there after this 15-minute candle has been formed. Putting our stop losses just above there, and our TPs will be the first 1:3. All right, 1 is to what? 1:3, somewhere around here. Let's see. So our stop losses would be somewhere there with our TPs around 1:3. Let's say the first exit would be somewhere there. So what happened right after that? As you can see, we got the market rejecting, okay, continuing to sell off. We had like a 1:1, is it? Yes, 1:1. The market got back to our price again and then got rejected. And look at what happened. The market started to pull back up, and we got the market to close above the moving average, meaning at this particular point, you would be looking to exit. So you would have been stopped out just like that. Don't forget that the fact that you have been stopped out earlier on the market, so meaning now instead of risking the whole entire account once you get the first profit, you should be risking like half of it, giving you at least a chance where you can enter, or maybe a third of it, giving you a chance where you can actually enter the trade, get stopped out, and have money for the second entry. Now, where would have been the second entry? Okay, this is now the downside of this particular trade, but the best this particular trading setup. But the best part of it is that once the market start getting to your direction, you have a much higher chance of making way much more than you would have made when you are risking the same amount now without these particular rules. Okay, so now let's see what happened later. So we would have gone back now to the weekly chart, and now reset this and actually look where we could have bought or sold once again. And the next place we could have looked to sell or buy would have been this area right here. As you can see, we have this area of interest where the wicks were touching that area. So this could be the area of interest we would have been interested in looking to buy, since we have this weekly wicks coming to retest that area 1, 2, 3. All right, so with that, the 2025 season comes to an end. I'm joking. So we have this area right there and this area right here. So that would be our next area of interest, right? Now we go back to the 4-hour chart. Once we mark the area of interest, don't forget we are marking the area of interest. Next, we are waiting for the price to get to our area of interest, right? So let's see what happened. As you can see, we got the market to our area of interest. Next, we wait for a rejection, maybe like an engulfing candlestick on the H4. And let's see what happened. We got the engulfing candlestick. So once we got that, we go back to the 15-minute chart. All right. So we put a line like there. We go back to the 15-minute and look at what we got right there. Okay. This is what we got. Once the H4 market has shown rejection, this is what we then got. We got the market to chop around our area of interest. So first of all, actually it has coincided with the fact that it is actually retesting our low, our high and median, right? So once we do get this, we would have entered at this area, putting our stop losses just above that area, and our TPs, fast TP would be around 1:3. The reason why I'm saying fast TP is because with you taking out the profits once you get to 1:3, it ensures that in the next trade you can risk much more than that. All right, so let's see what happened. Our first TP would be 1:3, and that would be our TP. So let's see what happened. First of all, we got the market to shop around our area of interest. As you can see right there, the market chopped around our area of interest, and it took some several 15 minutes. We almost got took out, and this could be the area where I would have looked to add more to our position. So trust me, if I got this market to retrace all the way back here, I would have had a very high chance of entering again, adding more to my position around this area, since I would still be expecting it to continue selling. So I would have kind of now two trades. Okay, but let's say I didn't do that. Okay, and we got the market back again to our moving average, and we got this good rejection. I could have added more to my position over there also. So, but let's see what happened. We got the market to start selling. Look at what happened. It continued selling and even sold more. Meaning, if we were not on the chart and we actually see this could be another area of adding more to our position. But let's say you didn't do all that. You could have made your 1:3 easily. So once you get to your 1:3, make sure you exit and then wait for the market to do this again. Once we get this, and still in our area of interest, as you can see, this was our area of interest. This is another trade. Meaning, if I had the $400 from the previous trade, that is, I risked my $200 at this point. I could have lost the $200 and then risk the rest of the $200 on this particular trade. Or let's say I was risking like 150. So 150 lost, 150 now at 450. So that means total profit would be like 450 plus, or 450 minus 150. That gives us, uh, just a minute, and we are back. So that gives us about um $300 in profit over the $400, who now would be at $700. Now dividing that by three once again, we could have risked about $200 on this other trade, or maybe $250. So now entering again at this point, at this particular point, once we get the rejection, this will be the area of interest, and now above that, putting our stop losses, let's say just about there. And look at what happened. Another 1:3. That now puts us about $600 more over the $700. Now that's about $1,300. And if I were to add more to our position, we would have more. But let's say you didn't. So now we also get another rejection. And look at what happened. You get again inside, putting our stop losses just above there. Don't forget, and look at what happened. Guys, I'm telling you, my boys, like, we could have made a lot more. So I am glad that I actually got to get out on this particular trade and still left out some profit. Okay, since we now have at least money where we could actually enter this particular trade once we get to what do you call this? Once we get to another trade. So, how we are going to look at the market has not changed. We shall still be looking at our area of interest on the weekly chart, but now our entry reasons, and how we are going to enter has changed. So stick around, guys. Make sure you follow, like, subscribe, and don't miss out when we have such kind of developments and additional more to on and more addition to this set and forget strategy. And I promise, guys, I won't break my own rules once again, because but I'm glad I did. You learn from losing rather than winning. I'm sure I could not have learned anything if I didn't do whatever I did, but I don't condone that. I will not do that again. So see you on the next one, and don't forget, set and forget every single time. Make sure you follow the rules and don't be like me. Okay? So see you on the next one, and once again, like, subscribe, and share. So yeah, peace out. And a happy new year, by the way. A very, very happy new year. So I shall be giving now the kind of Sunday market breakdown on Sunday. And you know, after that, we shall see you on the next one. The next trade we shall list just $100. So see ya.